Britam Holdings has posted a drop in half-year profit weighed down by rising claims and reinsurance costs. The insurer's profit before tax fell 11% to 2.5 billion shillings, pushing net earnings down to 1.7 billion. Higher service expenses and reinsurance charges squeezed margins, as Jimmy Mbogo reports.
For Britam Insurance, the first half of 2025 has been a bag of mixed outcomes, with the underwriter reporting a growth in revenue which climbed by 11% year-on-year to 19.7 billion shillings, supported by steady growth across both life and general insurance. Britam also saw a 30% growth in its investment income to close at 17.3 billion shillings, while gross written premiums stood at 26 billion for the first half of 2025. However, this was not enough to push the underwriter's profitability, with their net earnings falling to 1.7 billion shillings, down from 2 billion shillings reported in the same period last year, with the insurer noting that 2025 saw an increase in insurance service expenses, which climbed to 15.1 billion shillings from 13.6 billion shillings, and higher insurance costs that squeezed the underwriting margins.
The macroeconomic environment, and specifically the drop in the yield curve by around 275 basis points in the first 6 months, did contribute to an increase in the liabilities. So what happens is that when the yield curve drops, the customer benefits that you have on your balance sheet tend to increase. So that impact is normally absorbed through the income statement. And that's why we have seen a drop in the performance from the 2.8 billion to the 2.5 billion in the first year, in the first half of the year.
But it is perhaps fair to say that we have seen a slight increase in claims compared to a similar period last year.
Britam's balance sheet expanded, with total assets rising 8% to 225 billion shillings, while total equity strengthened to 31.2 billion shillings from 29.5 billion shillings in December 2024, even as operating cash flow surged to 7.1 billion shillings, nearly double the prior year, underscoring the group's improved liquidity position.
Our return on equity was 16% for the half-year again. Another KPI that we track very closely is the contractual service margin, which did record a growth of 14% to 12.4 billion. Now, this confirms that you continue to write profitable business.
We have also continued with a good measure of success in diversifying our revenue streams, both by country but also by offering for the various businesses. We have a concerted push to grow our retail book, and as I mentioned earlier, we already have upwards of 6 million clients.
To enhance growth, Britam says it is close to inking a deal that will see the underwriter set up shop in the Democratic Republic of Congo, widening its operation to 8 countries. For shareholders, however, it will be a disappointing half, as the board withholds interim dividend, opting to preserve capital in a volatile macroeconomic environment. Jimmy Mbogo, Citizen TV, Nairobi.